Please subscribe to our channel and press the bell icon to stay updated with the latest Bitcoin news, cryptocurrency trends, forex market insights, commodity forecasts, and expert technical analysis. Join our growing community of traders and investors, and never miss an important market opportunity. Bitcoin investors have been through turbulent markets before. We've seen dramatic crashes, breathtaking rallies, and moments when the entire crypto industry seemed on the verge of collapse. But the latest decline is raising a critical question. Is this just another temporary pullback, or is Bitcoin preparing for another major leg downward? Over the past month, Bitcoin has fallen approximately 28%, wiping out billions of dollars in market value and shaking investor confidence. While many traders are already calling a bottom, technical analysis suggests the decline may not be finished yet. Today, we'll break down exactly what's happening, why money may be flowing out of crypto and into artificial intelligence stocks, and what Bitcoin's Elliott Wave structure is telling us about the next major move. Let's dive in. To understand Bitcoin's weakness, we first need to look beyond cryptocurrency itself. Over the last several weeks, financial markets have become obsessed with artificial intelligence. Major technology companies are competing in what many analysts are calling the biggest technological revolution since the internet. Several high-profile AI companies have announced plans to go public. SpaceX has hinted at future public offerings. Anthropic is reportedly preparing for an eventual IPO. OpenAI has revealed ambitions that could ultimately lead toward public markets. Even Google shocked investors by announcing an enormous capital raise worth approximately $85 billion, one of the largest public financing events ever witnessed. The result? Wall Street's attention has shifted dramatically. Institutional investors are chasing AI-related opportunities with the same enthusiasm they once reserved for cryptocurrencies. When capital moves aggressively into one sector, it often comes from somewhere else. At the moment, Bitcoin appears to be one of the casualties of that rotation. Money that once flowed into crypto speculation is increasingly being redirected toward artificial intelligence stocks and technology investments. This doesn't necessarily mean Bitcoin's long-term story is broken, but it does create short-term selling pressure. Just 1 month ago, Bitcoin was trading significantly higher. Since then, the market has experienced relentless selling. The decline reached a critical low of approximately $59,111 on June 5. For many investors, this level looked attractive enough to trigger bargain hunting. Buyers stepped in. Short sellers took profits. A relief rally began. However, the key question remains. Is this rally the start of a new bull run, or merely a temporary pause before another wave of selling? To answer that, we need to examine the Elliott Wave structure. Now we will be understanding Elliott Wave theory. Elliott Wave theory is based on the idea that financial markets move in predictable cycles driven by human psychology. These cycles generally unfold in 2 phases: a 5-wave impulse trend, and a 3-wave corrective trend. During a bearish market, prices typically move lower through 5 distinct waves. Wave 1 starts the decline. Wave 2 offers temporary optimism. Wave 3 becomes the most aggressive selling phase. Wave 4 creates another rebound. Wave 5 produces the final push lower before a larger recovery begins. The reason traders pay close attention to Wave 3 is simple. It is often the strongest and most emotional phase of the entire move. Fear dominates the market. Negative news accelerates. Investors panic. Selling intensifies. And prices often fall faster than expected. Where Bitcoin appears to be right now. According to the current Elliott Wave count, Bitcoin appears to be in the middle of an extended bearish impulse. More specifically, Friday's low near $59,111 may represent Wave 3 of a larger Wave 3. For Elliott Wave analysts, this is an extremely bearish position. Why? Because a third wave inside another third wave often represents the most powerful part of the entire decline. This is where panic tends to reach maximum intensity. If this interpretation is correct, the market still needs to complete Wave 4 of 3, followed by Wave 5 of 3. Only then would the larger bearish sequence begin to mature. That means additional downside may still lie ahead. Why Bitcoin is bouncing right now? If the trend remains bearish, why is Bitcoin rising? The answer is simple. Even strong downtrends experience temporary rebounds. These rallies occur because short sellers lock in profits, bargain hunters step in, oversold conditions attract buyers, technical traders expect corrective bounces. Within Elliott Wave analysis, the current rally appears consistent with a Wave 4 correction. Wave 4 retracements commonly recover around 38% of the previous Wave 3 decline. Using Fibonacci analysis, this places a likely rebound target near $65,000. Some analysts see potential for a move toward approximately $65,750. This level represents an important resistance zone. As long as Bitcoin remains below this region, the larger bearish outlook remains intact. The critical $68,000 level. One price level stands above all others right now, $68,000. Why is this level so important? Because a move above $68,000 would significantly weaken the current bearish Elliott Wave count. In technical analysis, certain price movements invalidate specific wave structures. A strong rally above $68,000 would force analysts to reconsider the entire pattern. Instead of a bearish impulse, Bitcoin may be forming a more complex correction known as a double zigzag. A double zigzag is essentially a corrective structure that often appears before a stronger recovery begins. If Bitcoin breaks above $68,000, the probability of a larger bullish recovery increases dramatically. Until that happens, however, bears remain in control. What happens next? If the bearish scenario continues to unfold, Bitcoin could experience the following sequence. First, the current rebound pushes prices toward the mid-$60,000 range. Next, sellers regain control. A fresh decline develops. Bitcoin falls below the recent low of $59,111. Wave 5 completes the next stage of the bearish impulse. Only after that process is finished would analysts expect a more meaningful recovery. In other words, new lows may come before a sustainable bottom is established. That doesn't necessarily mean a crash back to previous cycle lows, but it does suggest investors should remain cautious about assuming the correction is over. It's important to remember that short-term bearishness does not automatically invalidate Bitcoin's long-term potential. Historically, Bitcoin has experienced multiple corrections exceeding 20%, 30%, and even 50% during broader bull markets. These declines often feel catastrophic in real time. Yet many eventually become mere footnotes in Bitcoin's larger growth story. The challenge for investors is distinguishing between a temporary correction and a genuine trend reversal. At the moment, the technical evidence suggests caution remains warranted. The market has not yet provided definitive proof that a major bottom is in place. Bitcoin's 28% decline has undoubtedly shaken confidence throughout the cryptocurrency market. The current rally may offer temporary relief, but according to Elliott Wave analysis, the bearish structure appears incomplete. Unless Bitcoin can reclaim and hold above the critical $68,000 level, the probability of new lows remains elevated. Investors should watch the coming weeks carefully. Will Bitcoin invalidate the bearish pattern and surprise traders with a powerful recovery? Or will another wave of selling push prices below $59,111 before a true bottom finally emerges? The answer may determine the direction of the cryptocurrency market for the rest of the year. Remember, no technical analysis method is perfect. Always conduct your own research, manage risk carefully, and never invest money you cannot afford to lose. If you enjoyed this analysis, be sure to subscribe, leave a comment below with your Bitcoin price prediction, and turn on notifications for future market updates.